What's up, everyone? Welcome to the first This Week in Crypto stream of the second half of 2024, July 5th here, and it has been a bloodbath. Lots going on, pain and suffering and FUD, all sorts of not so fun stuff for the crypto community right now, assuming you are on the bullish end of things. For those who have been shorting over the past couple months, congratulations, you're certainly in the minority, but most of crypto, which tends to lean bullish, understandably. It's a lot easier to long than it is to short. They are struggling right now, and there's, especially on the altcoin side, just huge market cap hemorrhaging going on right now. Yes, for those watching currently over the past 2 to 4 hours, there's a mild recovery going on, but at least here on the Pacific time zone where I am, when I was going to bed, it was just shedding upon shedding of market caps. So as I was going to bed, I saw that we had the largest amount in crypto of liquidations overall since the FTX collapse about uh, 18 months ago or so. That's a big deal. 20 months ago, excuse me, November 2022. So, with that said, we are officially at a point where a lot of those longs no longer exist. And I'll actually, before we look at some of the price changes, I want to show what the total open interest looks like. This is just the overall amount of positions that are open for Bitcoin. And of course, we could look at other assets too, but I want to look at Bitcoin primarily. And you can see this massive downswing here that occurred. We had this weird anomaly back on May 30th, but we really haven't seen anything like this since April. To be honest, I would expect an even larger drop than this, but regardless, it's certainly a sizable one. And we went from about 12.05 to 10.06 billion. So a $2 billion shed over the past 24-ish hours or so in total open interest toward Bitcoin. That's obviously a massive number. A sixth of the entire open interest has now vanished. Yes, there will eventually be a recovery to this. We can look over time and see how much it's climbed. Especially since pre-bull run that started around here in mid-October. Back then, we were seeing just $5 billion in open interest. So it had more than doubled a couple of times until eventually it retraced and got back to just about 10 billion. So it could very well be in the single billion digits by the end of the day. It's already right on that cusp. Besides that, I want to highlight the fact that the MVRV of Bitcoin, one of mine and many Santiment staff members and community members' favorite metrics, the 30-day MVRV is at its lowest point in the past year. We've not seen Bitcoin's 30-day MVRV get below 10%. For those uninitiated, MVRV stands for market value to realized value. And the lower this is, below 0%, the lower risk you have of buying in or adding on to your position. There's certainly no guarantee, but you can look at a negative MVRV as a good sign that you are buying in when others are in pain, right? And that's kind of the name of the game. It may seem like everyone is holding hands and singing Kumbaya together on X and various social media platforms, all making money together when crypto is going up and all losing money when it's going down. But that's not the case. Crypto is a zero-sum game, minus the fees, just like any other sector out there, really. And you want to be in or adding on when you're seeing this kind of thing typically. Now, again, this is a probability metric. It's not a flip on the light switch every time the MVRV goes negative and turn it off when it's really high like this. It just means the probabilities of a recovery increase when you see it negative, even though there have been historic anomalies. If I go back in time, let's go back between 2020 and 2022. It's gotten much below negative 10% several times. So, if you're hoping to buy in here, sometimes it can end up here or even here or here down the road. And of course, this was the huge collapse back in May 2021 after that initial all-time high, 68K. Got it, Alex. Thank you for letting me know. So there are situations where the MVRV can just have huge anomalies, but uh, if you're basing your trading strategies on probability, which I suggest many should, um, you would feel more confident than usual in getting in when there is this kind of level of pain. But of course, we need to look at many of the external factors that are causing prices to go down. The Germany Bitcoin sell-off, the Mt. Gox situation and the stalls going on, the Ethereum ETFs being delayed. These are all things that are impacting crypto right now and causing people to be a bit concerned and whales to be a bit hesitant. If we look at whale transactions now, I know I'm kind of going out of order here because I normally just recap the prices first, but this is important. Let's go down to 1 day. It's kind of just been flat, right? Let's even just smooth it out and look at weekly whale transactions over time, past year. Yeah, I mean, all of it really happened here. This was very obviously a lot of profit taking. Whales aren't the ones who are seeing this kind of rise and going, I should buy in more here. This is absolutely a lot of profit taking here. And ever since, call it early May, it's really flattened out and become kind of a dull story in terms of whales' actions. But of course, we don't want to just look at how many transactions they're making. We want to look at how much they're holding. And for that, we can go to the supply distribution. And there's really two key lines I like to look at. We'll hide the stable coins for a moment and just look at overall amount of BTC held by wallets with 10 to 10K BTC in them. So in other words, these are the almost millionaires all the way up to the multi-billionaires. This includes exchange addresses, Satoshi Nakamoto himself, if you believe he's out there with trillions of dollars of Bitcoin. All of the above are included in this bright green line. And there has been a correlation to this line in history. I won't do a full recap, but basically since right around the end of 2023 until now, the 10 to 10 plus BTC wallets have added about 181,000 BTC to their supply. And there have been a few moments where they go down or they flatten out. And when they flatten out or go down, that's usually when Bitcoin goes down. It's especially true here. Now, normally I like to look at the 10 to 10K BTC line, but this can get a bit skewed because, especially with the Mt. Gox trustee really altering things and consolidating wallets right now, this was caused by Mt. Gox, for example, and that's not necessarily a bad sign for crypto. So there have been a few strange oddities with the 10 to 10K line where maybe a lot of those 5,000 BTC wallets have turned into 50,000 or 150,000 Bitcoin wallets, making it appear as though the whales are selling when in fact the big wallets are just turning into gigantic wallets. And that's not necessarily a bad thing. So for now, if I'm you and I care a lot about whale tiers and how much certain key stakeholders are holding, just go with 10 plus, even though it's not a perfect science and you're looking at a lot of exchanges and things like that right now. So 10 plus BTC wallets are still looking pretty good. And even just in the last few days, as prices have really hemorrhaged, or here we go back 1 month. Let's go just 1 month back. And the axis is a little flat here, but if I just highlight the past month, hold down shift, Yeah, they've added 21.5K BTC. That's certainly a pretty nice number, all things considered. So this price line clearly moving down, combined with the amount of whales going up, the amount of coins in whales wallets going up, that's a bullish divergence. And yes, it's just one metric out of hundreds that Santiment has, but I'd call it one of the top five. I certainly put more weight in it than some of the others, which they're all important, but I really like this one. And for me, that's why I don't emphasize too much panic being in order here. And that's not a prediction. Anything can happen. There can be a news story that breaks next week. Donald Trump and his conversations about crypto right now, they are having an impact. If he suddenly says, you know what, I don't like crypto anymore, yeah, that can tank crypto, believe it or not. Um, so there are so many outlier factors that can impact where crypto goes next. But all we can work with is the data that's in front of us. And right now, it's suggesting that a recovery can and is likely compared to normal. The probability, I should say, is higher than it would be on an average day in crypto. But of course, that's no guarantee. And I want to keep that in mind and mention to all of you that, of course, we do not give investment advice. We're simply on the mathematical side of things when it comes to analysis. And we look at models like this, which is showing just almost universal underbought signals for most of these projects, which you would expect because we're not just looking at Bitcoin here. Altcoins have been destroyed. And I'm going to go to the actual price returns and summarize how the markets have looked next. But what this model does is show you on a range looking at 30-day, 90-day, and 180-day midterm trading returns all combined together and show how much the current uh, profits or losses are sitting at for the average wallet in each of these assets compared to a normal time. So when they're well above this underbought, especially this dashed line, which means it's like a top 5% moment. I mean, just eyeballing it, roughly half of them are even above this dashed line, and about 90 to 95%, maybe 97% of these are in at least some level of underbought um, thresholds at the moment. Chromia is one that's really standing out as underbought. High Street, these are the two most notable on this model. This is just about 100 to 120 projects right now that are showing. Of course, that's only less than 5% of what Santiment has. But these are specifically ERC20s, so they're the most notable out of the ones where we have MVRV data included. Bitcoin here, by the way, is semi underbought because obviously Bitcoin has not been hammered as much. So it's going to show up a lot lower than most of these projects. And really, the more the market cap has hemorrhaged, the higher up you'll see their underbought signals right now. But I recommend you guys check this out. And if you need a link to the model, feel free to just message us on the Discord server and we will hook you up and give you some quick instructions. Okay, as promised, let's look at some prices now. As expected, just red all over. A few exceptions. If you bet on Tron being the only, or practically the only, I guess you can include this barely, but essentially the only project in the top 100 market caps that are in the positive over the past week, you'd be thrilled right now because I don't think many people anticipated that. It's up 4%, best performer among the top 100, and it is a massive outlier, as you can see. Bitcoin down 10%, Ethereum down 14.5%, Dogecoin down almost 21%, Pepe actually the second biggest loser, down 31.5%, And Lido DAO, officially the biggest loser among these top 100 market caps, at minus 33%. Each of these projects has a story I could emphasize, but we'll try to go over a few projects and the specific metrics that are associated with them toward the end of this call. So feel free to queue up some questions now, and we will get to the most opportune 2 or 3 that we think can be relevant for everyone. All right, screener market cap. Yeah, I mean, this is a huge drop. The entire market cap of crypto, or at least the 3,000 plus projects that we have, are down a collective 12.3%. And most of that is, or not most, but a very large percentage of that is related to Bitcoin's drop. So Bitcoin down about 10%, the overall market cap down about 12.3%, tells you how much altcoins are weighing things down even further. Volume has more than doubled in the past week compared to the week prior. That's a huge, huge jump. So clearly, this drop has finally caught people's attention. We have been on, if you want to say it, almost a 4-month drop in crypto, but it wasn't until we really started to threaten going below 60K Bitcoin and then eventually breach below 60K Bitcoin. That's when volume really started to pick up here. So this is the first time I've really seen volume get to this level, and we can illustrate that if I go to volume comparison. That should work. Yeah, so take a look at this. I'll put it on a shared axis, and this gives you a really clear picture of how much trading has picked up as a result of this drop. Bitcoin is at about 52.8 BTC in volume over the past 24 hours. Let's zoom it out even further. Let's go to the last year, see if that's too spiky. Potentially. I think that this actually should be showing up higher if we zoomed in more compared to the past 3 to 6 months. But yeah, it's not quite at the level of volume that we saw right before the all-time high. This is where, we really started to see that polarization of people who FOMO'd in near the top or were taking profit near the top. If you were in the latter category, congratulations. But this is typically when volume picks up the most, when you see polarity and people unsure, or I should say, their opinions are most separated between extreme greed and extreme fear. And I think we're getting to that level now based on this. Notably, Ethereum is right there with Bitcoin comparatively. If I highlight this, outside of mid-May, which was right after the ETFs were announced, this is essentially the biggest volume spike we've seen in the past 3 months. We saw a tiny one here in April as well, which was also on a really big drop. So keep that in mind as well. And again, you see the biggest volume spikes when there's a huge amount of polarity, and obviously this comes with price swings, this one being a negative price swing, but we've seen the same on the positive end. Okay, so we haven't talked about the crowd's reaction, and I think this is a good time to transition over to that. Plenty of things to discuss on in terms of greed and fear and how the mainstream crypto community is processing everything that's been happening with these drops. As mentioned, biggest liquidations we've seen in almost 2 years, 20 months or so. We saw a pretty sizable spike. The crowd is certainly aware that long liquidations have been happening right and left. A lot of people view this as a bad thing, but it's actually a good thing. You don't want to see total open interest and huge amounts of longs kind of putting a cap on how much prices can rise. And you want to see funding rates, which I can transition over to, staying fairly neutral or even go lower. You want people in general to be betting against crypto markets more so than betting in favor of them. That's when prices go up most prominently. Let's see if I can get the Binance. Do I have a comparative one where I can look at a few? We'll just look at this one. Don't know why that's going. We'll do it that way. Okay. So Binance funding rate has been essentially neutral. You can see this green line here, not really skewing in either direction. Ideally, we see this. We see some shorts really starting to pour in, but that hasn't happened yet. So in terms of panic and people putting their money where their mouth is, we're not seeing as many people actually short the markets nearly as much as people are stating how scared they are and how worried they are that Bitcoin's going to continue falling. So yes, people are concerned, but they're not concerned to the point where they confidently feel Bitcoin is going to drop, and they actually want to put some money on that theory of theirs. If we look at a few other exchanges, let's add DYDX. So we saw a very, very mild level of shorting, which, what do you know, happened right at the bottom. This was about 8 hours ago. And then prices bounced and they're no longer shorting as much. Let's look at another one. Deribit. Not really much. A few shorts here and there on the drop, but nothing too special. Oh, BitMEX, there we go. So BitMEX is a big one. It's right up there with Binance as the largest impact in terms of funding rates. And yeah, they had a very brief short, but really nothing special. They're kind of just like Binance and staying pretty flat right now. So if you're looking for a sign of a true bottom, not to say it hasn't already happened, but in case we go lower, if you see a lot of shorts here, that's a pretty good sign that we're actually getting close, because those shorts need to be liquidated the same way longs do. And yes, we may have seen a historic level of long liquidations, but even prior to this drop that happened in the past 24 hours, there wasn't a massive ratio of longs versus shorts. Maybe on a few exchanges, but at least on BitMEX and Binance, the funding rate was essentially neutral and has been neutral for the past week and a half. Okay. Other things on the social end. So I got the go ahead to show the social narratives page. So we'll do that really quick. Let's reset these changes. I think the other view might be more useful right now. Let's open up the explore the narratives page. Okay, so yeah, Bitcoin's price actually not being talked about much. I'm somewhat surprised by that. GameFi, AI, art seems to be getting a little bit of extra discussion. I don't think there's anything too relevant here, to be honest, or at least worth spending too much time about. Let's look at it from this perspective instead. Hard refresh the page, will do. See if that changes anything. I sensed that. Thank you, Alex. Okay. Yeah, so it changes a little bit. Bitcoin's price is a little more neutral now. BTC in general is starting to widen in terms of its discussion rate. AI is starting to get a little more interest right now. I would guess that's due to a little bit of a recovery that's going on among AI assets right now in particular. The Bitcoin ETF, interestingly, is starting to get discussed. My sound is broken. One sec. Test. 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 Awesome. Thanks. Okay. So Bitcoin is being discussed at kind of an average level. If we look at some of the custom search queries here, so let's just go BTC or Bitcoin to start. We'll do several of these. Yeah, we had uh, this spike here in terms of social trends, but that was really just a reaction to Bitcoin going 255K and threatening to go below. If we look at buy the dip, right, this is an important one. Really not as much as you would think. Yes, we had certainly people starting to mention that it's time to buy the dip, but not quite on the level that we saw back in early May or mid-April, when there was a really, really big spike. And that's actually a decent sign. I think if there was a huge level of people optimistic that prices are about to turn around, that would indicate that we're actually almost surely going to go lower. But the fact that people are kind of having this trading paralysis right now where they just don't want to make a mistake, that's a sign that there's some fear going on. And with fear comes recoveries. So decent sign here. That being said, it's this dip isn't being ignored. This is certainly still being talked about, and plenty of people are mentioning it, just not on an egregious level. I also want to look at one of my favorite combos, which is buy or buying or bought versus sell or selling or sold. All right, shared axis, I'll enable that. Let's just look at the last week, get really granular here. So huge spike here. We actually highlighted this on social media yesterday. And this was a sign that people were getting overly fearful. It ended up marking a local bottom for maybe 6 hours or so. And then the sell mentions started drying up, not being discussed anymore. And then we go way down. And then you get a combination of people mentioning buying and selling, probably a little more buy bias than usual, which is not a good sign. And now it's kind of a mix. I would still call this a little bit too much optimism for what we would want to see. But of course, this is very, very granular stuff. We're looking at this on like a 15-minute basis. If we really go zoomed in the last hour, every 5 minutes, yeah, it's a mix. I still see a lot of very high blue lines compared to red lines. That's not quite what you want to see. We actually want to see this, right? Red lines dominating with people mentioning that they're selling or they sold or it's time to sell. And then you get a quick recovery like this. I really like this chart. Based on various platforms, Reddit, they tend to be kind of the most prominent and vocal people when it comes to buying the dip. So they're doing a lot of that right now. Twitter is doing a lot of fear mongering and telling people to sell. That's not a surprise either. 4chan, buying the dip, and the others are kind of neutral. Okay, let's take a look at the on-chain and social metrics now that are directly on our Sandbase chart templates. Beginning with transaction volume, we have seen kind of flat transaction volume. It's not really going in either direction right now. Trading volume, this needs to be refreshed, excuse me. There we go. So a little bit of an upswing in transaction volume, but still, I'm not really seeing anything notable here. Trading volume, as we discussed, it is starting to really pick up. In fact, this is the highest spike in trading volume that we have seen since March, almost 4 months ago, 3.5 months ago. Yeah, that's huge. That's definitely huge. So yeah, trading volume, as mentioned, is certainly reflecting the amount of polarization that the crowd is experiencing right now. Daily active addresses, fairly flat. We did have a big day here. This could have been a profit-taking signal from a lot of the larger wallets out there. Circulation is picking up. So the amount of unique coins moving from address to address is growing at the moment. MVRV and funding rate, we're good on those. Whale transactions, good on those. We talked about the key stakeholders. Ratio of transaction volume in profit to loss, which is a metric I definitely like. If I mark the 1.0 line right there, anything below on a daily basis means there are more transactions happening at a loss than they are in profit, meaning the Bitcoin in those wallets are being sold at a decreased value compared to when they obtained them. As you would expect, it's been mostly more loss transactions than profit transactions, and by a pretty wide margin too. This was the signal that we might be topping. There was that attempt at a bounce. We got up to about 63.7K or so. And you see all this profit taking, right? And that was not what we wanted to see. And then prices go back down. We've seen several instances of similar, profit taking spikes leading to a top. I think this was the most notable one about a month ago at the very beginning of June. Big coin movement happening while those addresses were in profit, and then down we go. So look for this kind of thing as a good long-term signal of a recovery. There's just tons of capitulation, traders moving coins at lower values than when they obtained them because they don't want to see their portfolios go any lower than they already are. And that's a good sign that we are getting close to a potential bottom. Another decent sign is the fact that the long-term line, reflecting the mean dollar invested age of Bitcoin, is not really climbing. This is a typical interval of time where Bitcoin wallets are pretty stagnant, and there's not a lot of older wallets that have coins, growing metaphorical cobwebs all over them, just sitting, and it's causing the network to get very stagnant, and those coins are not circulating back into mainstream trading. And then the bull run starts, right? And suddenly this line starts to go down. That's pretty typical. When you see a big green bar like this and suddenly the mean dollar invested age line actually drops, that's a sign that we could be starting a bull run. And that's essentially what happened between mid-October to about mid-March, that 5-month stretch where we just saw huge dropping in mean dollar invested age. In fact, it trickled all the way until early April, and that's when the line finally started to flatten out. It grew, and then the Mt. Gox line gave it one final drop, and it's kind of been chopping ever since. So dormant wallets are trying to decide what to do right now. They're certainly not making the line drop even further, but it's not growing either. And that's a good sign to me that we aren't just going right back into stagnant mode like we were seeing in the summer and fall of 2023. If you do start to see this line growing consistently, like we were seeing a tease of for about 3 weeks here, that would be a sign we're starting to get into that cycle of coins just sitting and waiting again, which we don't want to see. Also, take a look at the network realized profit loss. We actually had the most realized losses. Let me just put this on a daily basis instead of 12 hours, make it simple. Yeah, so most realized losses we've seen since late July of last year. So almost a year ago, since realized losses have been this prominent. And that's a good sign as well. Kind of like the ratio of profit to loss we just looked at. Negative means that people are capitulating and moving coins at a deficit. What you don't want to see is just flat, like really low, kind of stagnant ones. But for most of this time, it's been pretty high, actually, these would be the true flat lines that we don't want to see. So negative 494 million in terms of realized losses in the past day or so. Exchange flow, supply and exchanges remains low. That's good to see. We, are in a stretch right now where we could easily start to see Bitcoin moving back to exchanges. We might have seen a very slight indication of that, but I'm not seeing anything here to be concerned about. Social dominance, yeah, we saw a bit of a pickup, but nothing extreme. It wasn't quite on the level that we saw back in January. And then weighted sentiment, very important. It's been negative, as we've talked about on our previous This Week in Crypto shows. There's already been a negative sentiment toward Bitcoin, and it doesn't hurt that we're still in negative range. I don't know why this is not up to, oh, there we go. That was strange. Now it's fine. So this large stretch from late May all the way until early July of negativity, I think this is a good sign. We want the crowd to stay angry and pissed off and frustrated in how crypto is going, because that typically will eventually lead to a big recovery. If the crowd was neutral or even positive because they all want to buy the dip now, that would be bad, because they're all anticipating that prices are going to recover, which is what leads to those sell walls and the things that prevent the recoveries from happening. Because the whales see that. They see all the optimism and limit orders and small dip buys for fractional amounts compared to what they hold. So it's good that people are remaining very, very frustrated and showing a lot of FUD toward Bitcoin at the moment. RSI, as you would expect, very low. In fact, this is the lowest we have seen the RSI since August of last year. We're at about an 11-month low in RSI right now, which is a great sign. This would be neutral right here at 50. I'll mark the line right about there. So we've been below the 50 mark for about 3 weeks now. And as long as that's the case, we're in a better than average situation according to the RSI. We want to avoid adding onto our positions when we're in huge high levels like 70 plus, 80 plus, like we saw right around the all-time high, obviously, or even when things flattened out in late October, early November. Total amount of holders, also a good sign, continuing to go down since June 15th until now. The amount of wallets with Bitcoin in them has dropped by a net of 512.4K, which is massive. That's about a 0.94% drop of all of the non-empty Bitcoin wallets out there in just the past 3-ish weeks or so. Also a good sign that capitulation has been happening and a bottom is nearing. One final thing, I want to go over a few of the insights that we put out in the past couple of days. As mentioned, this was the largest ratio of sell calls versus buy calls, happened roughly 24 hours ago. ETF volumes, if you're wondering how the actual amount of activity is going for Bitcoin ETFs, at least prior to today, we were seeing one of our lowest levels of the year. I anticipate it's going to pick up. We'll have the data at the end of close today, so we'll update you guys on that. But for now, the ETF volume has just been declining massively. Not necessarily a bad sign. It just means that the those that want exposure to crypto without actually holding crypto, they're not doing much right now because, they were just introduced to crypto in January when, if I drew the price line, it was kind of going like this up until March. So they only knew about gains up until here. And then ever since, it's kind of been going down and down and down. And that's, these people who are new to crypto, not all of the ETF traders are new to crypto, of course, but many of them are. They're now seeing like almost a 4-month slide now and going like, I don't want to be doing any trading right now. I'm just going to let things sit and see how things play out, because I liked it a lot more when crypto was having a big party in the first quarter of the year. Also keep in mind some altcoins like Optimism, Storage, Nexo. There's still plenty of active address spikes going on that can indicate a bottom is getting close. Of course, after this post, they're continuing to flush just like everything else because Bitcoin is pulling the entire sector down at the moment. But assets like these, if and when markets finally recover, which it's a when, not an if, and when they do, look for projects that are seeing anomalies like these, whether it's daily active addresses, whale transactions, network growth spikes, things like that. Also on our activity matrix, I want to point out a few of them. Besides Nexo and Storage, Decentraland, the Sandbox, these are all having big active addresses. Network growth, Nexo, Storage, Ethereum name service, Fetch, of course, which is merging with Agix and Ocean. Whale transactions, Nexo, Convex, even ApeCoin are seeing huge amounts of spikes right now. Social Dominance, Small Love Potion, Dojalon, a lot of assets that are very low on the totem pole that are seeing particularly large drops are the ones that are likely being talked about the most. In terms of coins that are seeing a lot of their supply moving off exchanges right now, Sushi and notably Chainlink are actually seeing a very good level of supply in exchanges right now. In fact, I want to check that out. Chainlink supply on exchanges. Yeah, it's kind of a weird pattern going on for Chainlink. Huge amount that came on here. I don't know if this was related to the Mt. Gox movement from the trustee or what, but they just had a massive amount, like almost 2% of the supply moving back onto exchanges. And ever since, it's been moving aggressively back off again. That's why we see Chainlink up here as having the third best day in their past 90 days. That's what these numbers mean in terms of exchange flow, moving off exchanges. On the other end, by the way, Fetch, which makes sense because of the merger, they're seeing its largest day of supply moving onto exchanges. We can illustrate that here, assuming my model's correct. Yeah, that would be the largest day. No kidding. So it went from, wow. So if the numbers are correct, this is almost a 9% jump of the entire supply moving to exchanges yesterday. That was massive. So this is obviously an anomaly because it's a merger. So I wouldn't put too much into the price, but still very interesting nonetheless. Phantom, another notable one. Nexo, Bitcoin, which is interesting. I think that's mostly because there's been mostly just down movement in supply and exchanges, but it did have one of its lowest days yesterday, or days where there was the most amount of Bitcoin moving to exchanges. We still looked at it and it wasn't a very large amount though. Mean dollar invested age, keep in mind Cardano is actually seeing an amount of dormant movement that is notable right now. Mean dollar. It's not much. Yeah, not much at all, really. It was just a small downtick, but compared to the past 3 months, there have been very few downticks. That's why it's showing up. Age consumed, Convex, Mask, and Cardano again. Let's look at age consumed. Check out Convex, which is having its highest day. Yeah, just a little bit above everything else. Not a huge anomaly by any means, but Regardless, I want to point out that this activity matrix is still being used by many of our community members now. And if you're an altcoin trader, especially, this is a pretty awesome way to get a quick glimpse at which networks are becoming the most active at any given time. You can also just go to this grid view and look at every single metric by the past week, or look at the color of its label to see whether it is hot, like Chainlink, which is seeing a lot of movement at the moment, or Acropolis, or Ocean and Nexo, or Mask. Mask looks to be the darkest red here, so it's the most active compared to normal of all the assets on this. Meanwhile, XRP is very cold. Gitcoin looks to be the most cold. Shiba Inu is particularly cold right now, seeing very little movement. Look at this as not a, bullish or bearish grid, but more so a price direction heat map. So the more hot the network is, the more likely it is likely to see a bounce when markets are going down. So at least right now, orange and red indicates a higher probability of a bounce, whereas blue and green indicates a lower probability of a bounce because all markets are moving down right now and direction changes are less likely if the label is blue. So that's a quick tip on how to use this model effectively. Okay, we're a little under 15 minutes left on the stream, so I want to get to a few questions or requests if there are any, Balresh.
Okay, we have two asset requests from Alex, which are ICP, Internet Computer, and Arbitrum.
Let's do it. ICP. So ICP has been, it was a darling back in 2023, but it's kind of fallen a little bit in terms of the crowd's interest in 2024. Nevertheless, it's still the 25th ranked market cap asset. It has dropped. Let's make these price, we'll zoom in tiny bit so we can see these candles a little better. Past 12 hours, 12-hour intervals, I should say. So since March 27th, when it had its all-time high, the price has dropped almost 64%. Certainly not great, but also pretty typical of a lot of altcoins. Trading volume, really nothing special right now. A lot of crypto is moving up a tiny bit, but this is not anything notable compared to its past or year to date, I should say. All right, ICP funding rate. Yeah, we are seeing some shorts right now, which is a good sign. This is actually the second largest short spike, and I think it's tied for. Yeah, this was the largest shorting going on, and this was a great bottom for ICP back here in mid-April. But regardless, seeing the fact that people are betting against ICP right now and expecting prices to go down even more, that is a good sign. You want to see the opportunity for shorts to get liquidated. And if they are liquidated and prices start to rise, then these shorts here, this bar indicating there's a higher degree of shorts than longs, that's just going to add rocket fuel to prices going up quicker. I'm skipping a lot of these because ICP is not an ERC20, so they're kind of, it's going to say no data due to the metric not applying to ICP. But you'll see other assets we check out here that will have those metrics. So I'm sorry if we don't have a complete comprehensive look at ICP. Yeah, as far as social volume and dominance, pretty non-existent. You can see when it was being talked about a lot on the tail end of 2023 and early 2024, it was still a very popular project. But since this top, it's just been kind of a straight, almost straight fall down, going from, what was this price exactly? Yeah, a little over 20, almost $21 down to where it is now at about $6.70. And because of that, the amount of mentions of ICP has really not been too favorable. Favorable is kind of the wrong word, actually. I should just say not very notable, but the amount of discussion being so low could actually be a good thing because it's under the radar right now. And if and when it has its uh, inevitable bounce, I shouldn't say inevitable, but likely bounce, like every project will at some point after the bloodbath ends, ICP could bounce at a much quicker rate than others due to the fact that it's being ignored and it won't have much resistance. And as you'd expect, weighted sentiment is negative. It did have an interesting jump into very mild positive range here, but you can see overwhelmingly it's been mostly negative discussion related to ICP. Development activity, this has been a pretty good asset in terms of development. It certainly has a dedicated team that is working on its advancements and making sure that the project has plenty of effort toward innovation and improvement over time. And then RSI, very low, just like Bitcoin, below 25 right now, which is historically a buy zone for this particular metric. I wouldn't say this is the end all be all metric to indicate that it's time to buy, but take it with a grain of salt. RSI is showing a very favorable position for ICP, the most favorable of the year today. All right, so that's ICP. Let's check out Arbitrum. And we do have plenty of data on Arbitrum, so we'll do a little more of a comprehensive look. Transaction volume, pretty typical. It's up a little today, as most assets are because of the polarization. Trading volume, not really much of a climb. Daily active addresses are starting to rebound a little bit. Obviously, it's nothing compared to March, where a lot of assets were getting huge active addresses back then. Circulation, pretty normal. Arguably a very small climb, which is good. So this is not a bad chart at all when it comes to the utility of Arbitrum. We should have MVRV, we just can't use intraday for this one. 30-day and 365-day. So just looking at these two, the 30-day MVRV for Arbitrum is down to negative 26%. That's the lowest we've seen in about 3 months. And the long term, this seems odd. I would not trust this yellow line. I think we start here, and Arbitrum is way down. So yeah, both are in negative range, and that tells me that buying here would be doing so at a much decreased risk compared to the usual time you would add on to Arbitrum positions. So that is a very good sign. How big is Arbitrum's? Yeah, the 39th ranked market cap asset. Whale transactions, nothing really special here. It's mostly been a decline ever since March. So whales are kind of sitting on the sidelines, but we can actually look at their tiers now and see the different levels of Arbitrum wallets and what they're holding right now. Price is at about 62 cents. So I'm going to say sharks and whales are going to be about 10K or more. Mostly going down. The largest one is going up. Let's merge them all together. We'll overlay the price to see what kind of correlation there is. Not much. Let's try going a little bit higher, 100K or more Arbitrum. You go the opposite direction too, 1K or more. Yeah, not really much of a difference on any of those combinations. It looks like overall the large wallets are getting larger, and that's certainly not a bad thing at all. Over time, even though there's all this volatility, we went from super low back here to what looks to be, if we just look at 1,000 or more Arbitrum wallets, they hold about 98.26% of the supply. If we went all the way up to 100K or more, they own about 87.9% of the supply. So the whales aren't going anywhere. They're not selling off and letting these small wallets just hold more and more right now. That's a good sign to me, but it's very flat as well. So it's just not much movement going on in terms of Arbitrum whales. Mean dollar invested age, mostly just going up right now, so not the best sign. We want to see kind of an eventual drop down and consistent dropping down. Network realized profit loss, mostly in negative range, as you would expect with the price falling off a cliff like almost every altcoin is. Social volume and dominance is a little better than ICP. We've started to see a little bit of an increased discussion rate in the past 2.5 weeks or so. Nothing like the big spikes that we saw at the end of 2023. Let's just cut off that and look at the past 6 months. Yeah, so it looks a little better. Arbitrum is getting some attention right now. That could be a sign that, if I had to guess, people are very negative toward it due to how much it's fallen. If we go to our analysis tool and we go to ARB or Arbitrum, and we look at the social context, lots of discussion related to withdrawal or bot. Arbitrum bots are discussed quite often. Mostly Telegram, a little bit of Twitter/X. Those are the two platforms that are primarily talking about it right now. But that's about it. All right, so that's a decent recap on Arbitrum, which, by the way, is getting a decent amount of positive sentiment lately. Development activity, it's there. It's not quite at the level of ICP, but the team does seem to be actively working on the project, which is a comforting sign. The RSI is under 50, but not quite looking as good as Bitcoin or ICP at about 37, where 50 is average. For comparison, Bitcoin and ICP were both in the 20 to 25 range, which was even better. Okay, that's a recap on Arbitrum. We talked about ICP, a little bit of Bitcoin. Really briefly before we sign off, just a quick look at Ethereum to see if there's anything. Ethereum's MVRV, I think, is worth noting. Unlike Bitcoin, where the MVRV is still in positive range, Ethereum's long-term MVRV for wallets that have been active in the past 365 days, it's still at plus 31%. So it's quite high, interestingly. 30-day MVRV is negative, but ideally we need to see this long-term MVRV come down a little more before I'd be really comfortable in putting more into Ethereum right now. Funding rate flat, whale transactions, not much. I mean, everyone's kind of sitting and waiting for further Ethereum ETF news, I think. Mean dollar invested age, a little bit of dormant movement here. That's a decent sign, but it's starting to climb back up again. Supply on exchanges is flat, but it had been moving up for quite some time. This is much different than Bitcoin. You can see how Ethereum has just moved on to exchanges more and more. That has me concerned for sure. Not much discussion about it anymore. This was when the ETFs were announced, so everyone was excited about it here in mid-May. Development activity is still looking great for Ethereum. It's consistently been in the top 10 to top 15 developed assets in crypto. And RSI is pretty low, not quite as good as Bitcoin, but sitting at 29, which is still the best RSI we've seen in terms of a buy suggestion since September. So a little 9-month, 10-month high or low, I should say, right there. Okay, well, that's a recap, folks. We're right at the hour. I think, to summarize what the metrics are showing, at the very least, a short-term bounce is more probable than it has been in quite some time. If you're expecting this to now be the time to buy, and look back on this time a year from now, I wouldn't go that far. We could very well see a relief bounce, and then it's up to the crowd as to whether that relief continues or not, because the crowd could very well, see Bitcoin creep back up to 60K or close to it, get super excited. Then everyone says, look how smart I was. I sold at 65K and I bought back in at 58K and now it's going to the moon. If you start seeing a lot of that narrative, then we're very likely to get a local top at that point. So looking 2 or 3 steps ahead, there are some concerns that there isn't really much shorting going on. There isn't quite the level of panic that we'd want to see, even though there is panic for sure. But this isn't like the level of dread and, horrible narratives that we were seeing during the FTX collapse back in November 2022, for example. And if we do see that, that's when you really are going to be excited about the prospect of buying more, if that is your preference and what you're waiting for. So all that said, folks, be safe out there. Do not overextend or overreact or get too high or low when markets are getting dicey and volatile and polarized like they are right now. Just proceed with patience and caution and all of that stuff that leads you to making good decisions, because with irrationality comes panic and portfolio decisions you may regret. So that's all I'll say on that, whatever your stance is on investing and trading. Cheers to you all. Thank you for watching, especially if you watch the whole thing, and thank you for the questions and comments. On behalf of Balrash, who always runs a great stream for us, and Maxim, who couldn't be here this week, he was traveling. Wishing you all the best, and we'll talk to you next week. Bye.